Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, January 18th. We got a few economic news releases to go over today, so we'll just jump right into it. We'll start off with the Consumer Price Index. This is kind of an important index because it provides us information on the inflationary number on the consumer level. So we had a 0.2% increase in the CPI in the month of November, and in December came in at 0.3%, or the forecast was supposed to be 0.3%, and it came in expectations. Now, when you strip out the food and energy, which creates a lot more volatility, we have the core CPI, and this is really kind of what we look at. So back in November, we had a 0.2% increase, and the forecast again was at 0.2%, and it came in at 0.2%. So basically, this is the fastest we've seen inflation go up over the last 2 years, since 2014, and it came in at about 2.1%. Now, this is a good gauge to look at things. We do watch this one, and it does have an important role, but the Fed does look more closely at the PCE, or the personal consumption expenditure, for their true gauge of the inflation numbers. But we do look at this as well. Industrial production, we had it fell 0.7% back in November, but month of December was supposed to increase about 0.9%. And it came in pretty much in line at 0.8%, so pretty good number there for industrial production. And capacity utilization, same thing. We had a 75% back in November. It was supposed to increase to 75.7%. It did pretty much come in again, pretty much in line at 75.5% here. So a bit more improvement in capacity utilization. Then we also got the Home Builders Index. This is kind of the gauge to figure out their confidence level for home builders, and this kind of tells us if they're going to be building more or not building, if they're feeling confident where the market is. And obviously it looks like it dropped. So from December to January, it looked like it dropped from 70 down to 67. So something like that we're going to want to definitely keep an eye on as well. And then last but not least, later today the Fed Beige Book will be released. So of course that could create some market change in the market as they look through the book to determine any information that they weren't aware of from the Fed. So let's jump over to the headline news here. Stock market's a little mixed. The Dow is down a little bit. Again, it's basically taking its cue more from the earnings reports being released today. So financials, been getting some good reports. Citi kind of failed on their revenue side. They came in below expectations, but on the other hand, Goldman Sachs came in over their expectations. So that's a part. And then oil has slipped a little bit. The investors are kind of figuring that the so-called production cuts agreement that OPEC and the other oil-producing countries had agreed upon looks like that's not. They're having doubt that that's going to actually take place or work. So you're starting to see oil come down a little bit as well. And also a part of that is due to the stronger dollar. The dollar's been going back and forth with comments like yesterday. It got weakened with Trump's comments about a stronger dollar being not so good, and today the dollar got a little bit stronger, which also pushes oil prices down. And of course, 10-year treasuries are up a little bit from where they left off yesterday as well. And then the investors are going to be also looking towards Janet Yellen today. She's going to be having a speech at an event going on, and basically they're going to listen for her views as to the pace of the rate hikes this year. Now, there's been a few instances where they think that during the Trump presidency, they think that a few members of the Fed has said that they could see possibly raising rates even more rapidly than anticipated. So they're going to be listening to her, see what her thoughts are. After all, she is the Fed chairman, and she makes the final decision whether to raise or not raise rates. So they're going to be obviously listening to what she has to say. So let's go ahead and take a look at the bond market. We had a nice day yesterday. We closed above that 50-day moving average right here. But unfortunately today we got squeezed. So we got knocked down. We're currently down about 25 basis points, knocked down below the 10-day moving average. So basically the 10-day and the 50-day moving average are kind of right there at that first line of resistance. So that got a little tough for them, and it actually knocked them down further. So we're down 25 basis points, which results to a little bit higher pricing today for interest rates. So we'll have to kind of keep a watch to see. This could be a little bit more affordable. This could be formidable. It could be a little bit difficult for us to break above it. So be very cautious here. We could be in the sideways movement for a period, or before we can go upward. So this might be a little tough to go going up above that. All right, so if you guys want to get any more updates, that's pretty much all what we have today. But if you guys want more updates throughout the day, I do post on Twitter. So just stop by Mike Bjork on Twitter, and you can get more updates throughout the day. And I hope you guys have a great day. We'll look forward to seeing you guys tomorrow. And thanks so much for watching. Bye-bye.